Hi and welcome to Eyes on Business channel. Today I'll be teaching you a financial formula that is used by so many companies. What does it do, this formula? Let's find out. That formula is EBITDA. We're gonna pronounce it as one word, which is EBITDA. Okay? Very good. So what does it stand for? EBITDA is earnings before interest, tax, depreciation, and amortization. What is EBITDA? EBITDA is a formula for financial measurement that is provided by your accountant in order to know the situation or the performance of your operating and the profitability of your business. Okay? Who use EBITDA? Accountants, auditors, managers, investors, and banks. How to calculate EBITDA? This is an example to explain how you go through the calculation of your EBITDA. In order to know your net income, you will need your revenues and deduct the cost of goods sold. Okay? And you get gross profit. After that, you're going to deduct your depreciation and amortization, the overhead expenses, the interest, and the tax. Okay? And you get your net income. So for the EBITDA, what we need to do is to take that net income and we're going to add some amounts right here. So you take your net income, okay, and you add your taxes, your interest, your amortization and depreciation, and that will give you the EBITDA at the bottom, as you can see. This is an income statement for 3 years of accounting periods. When you need money and you want to borrow that money from your bank is going to ask you for your income statement. The reason why is for the bank to see how much is your EBITDA besides your net income. Okay? And then they're going to make a decision and lend you the money. Okay? And that is going to be a debt for you that you're going to pay back. And you add the financial charges. Okay? Also, your investors. Your investors need to know your income statement, of course, the EBITDA and the net income, so they can invest their money in your business. Okay? And also the managers. The managers need to know the EBITDA so they can make decisions. They can see how the business is doing, how much they are making as net income, and how much is the EBITDA. That way, they're going to make decisions. And then your auditors. Your auditors need to know the income statement. They can get an idea about your financial situation, your operations, how much you're making as net income and as EBITDA. And of course, your accountant need to keep track regarding your revenues, your expenses, anything that you buy, anything that you sell, all expenses for the whole year, including salaries, including purchases. So with the help of your accountant, you can make decisions, you can establish strategies toward your goals in order to advance, in order to develop your business. So the income statement is very important as long as you are making money, okay? And that's why we need to know how much is the EBITDA, how much is the net income. Okay, so you can make a decision. So now you know how to calculate EBITDA. You got an idea through this example. And please subscribe so you can get notification regarding next videos. And if you speak French, this is our version in French for this lesson. I'd like to thank you for watching this video, and please feel free to send your comments, your questions. Thank you. I will see you next time.